typically when we're making a trade, we're applying some kind of pattern. We're using some method to forecast, to predict what we think is going to happen. So, you know, we're at www.dailyfx.com. You know, here's the URL. I'll put in the description below this video. Now, I'm just going to use, you know, the thing is, there are multiple different ways that you might be making your prediction. You know, there isn't any magical method that always works. If there was, then we'd know about it and the market would price it in. So, you know, if we knew that, oh, when the market falls down with 5 red candles, then it'll go up, but not to the top, to just over half. Well, then why would anyone sell down here? You know, by the time we've had 4 candles, we'd be kind of going, I think I'll get in before the other people buy at the end of the 5th. You know, the market would price in that information and that opportunity would be gone. So what I'm going to do here is use a couple of methods, standard methods, which people use to make predictions, which they use when they're trading. And we've already looked at these, you know. So I'll begin. Put in this, and I'll just use the RSI today. Now there are many other ones. You know, this might not be your favorite one. You might like the MACD. You might like, you know, various moving averages. You might like not using daily charts. You might trade off hourly charts. They're all, you know, as good as each other. Whatever works for you. So with RSI, the general pattern is that when it's down to about 30, now it could be 40, so what you'd normally do, or what I do, is, you know, you look at the thing that you're working with, in this case, you know, the DAX, and you see, okay, it seems to be that 40 is the bottom. You know, so when it falls, when it hits about 40, that's a good time to buy. That seems to be the bottom. Likewise, now it seems to have fallen to 30. So even there we can see, you know, there isn't any steadfast rule. You can't kind of go, oh, but I know I read somewhere it has to be 32, or it's always noisy. For example, I remember actually from DailyFX in the 2007-8 crash time, there some guy had done an analysis and he was saying that essentially once the RSI falls to below 30, when it goes down to even 20, that in his work seemed to showed a change in mode when the market now, even though it was oversold, that was a trigger to buy, or sorry, that was a trigger to sell. So once it broke below 30, that standard rule of buy at 30 no longer applied. Again, that was just from his work, but something to keep in mind. So the idea there is that the RSI is basically a range trading tool. So when the markets are at the bottom of the range, the RSI falls down to 40, maybe 30. And then when it hits the bottom of the range and starts going up, the RSI keeps going up till it typically hits about 70. Now, again, it depends on the market. It could be topping at 60. When it's very overbought, at times it will jump to 80. So for me, typically, and I haven't done a lot of research on that, but instinctively, I'd kind of think of 80 as being overbought. That, you know, so you don't want to hop on board something when it's hit RSI 80. It's kind of in an unusual, it's in an extreme mode. So now it might keep shooting up, but it's no longer. So I would typically, okay, I'll actually just use this rule as my example. So say you wait till the RSI hits 80. My rule here is that it's actually going to drop until it hits the 20-day moving average. So in this case, that worked. So in a way, that's a cheat, because I could see that happened, you know, before I made that rule. See, the danger is that, as I said, normal rules don't apply. So now it might fall down and hit the 20-day, but in a way you're playing that catch a falling knife game. So like when you sold it here, so say I sold it here, I've exposed myself to unknown risk. I don't know how high this is going to go. I might be correct. I might later on fall down, but this could go up 1,000. It could go up 2,000. So I could not comfortably place any stop loss. Now maybe what I do is wait till this day close. No, there just isn't a simple rule which would let me place a stop loss. So now this could go on, this lesson could go on forever, but so I just wanted to keep it tight. So the idea is that when we're trading, we use some kind of mechanism, some kind of rule on which we trade. So we can just specify step by step. I can explain to you, a computer could do it, what I mean. So as an example, a rule might be when it hits the RSI on a daily chart, hits 80, I want to short it, and then I'll close it when it hits the 20-day moving average. Now this isn't a complete trade though, because I also want to know, okay, where do I put my stop loss and where do I put my take profit? Well, the take profit I said when it hits the 20-day moving average, take profit. So every day, you know, update that. So it's not something I can just set and leave alone. I have to dynamically reset it. But I haven't specified what my stop loss is. So like when I sold it here, how much risk did I take on board? So the rule I'm just going to apply is what? I know, I'll have to add the average true range. So remember, so the average true range tells us how much this thing, in this case the DAX, changes. So how much it changes by on average. So here, as I hit the peak, the RSI, this is the RSI, the average true range is below. So when it hit 80, the average true range, it was 200, roughly. Okay, so when I sold it here, the rule I'm saying is I'll put on a stop loss which is 200 above, and the profit I'm hoping to make, so this was at 12,200, and in the end it's sold at 11,800ish. So in the end I would have made a €400 profit, and I would have risked €200, which is all well and good. So now what I want to do is just look at 3 other examples when the RSI hit 80 to see what would have happened. So in this case I would have made a profit of, I think, €400, which is an encouraging start. But here I knew that it happened before I made the rule up, so it's not really a legitimate example. Okay, so 3 more examples of RSI hitting 80. There's one quite recent. So here we are, RSI. It didn't exactly hit 80, but I'm going to say, look, this is not an exact science, so I'm not going to be, that panicky. So my rule would be sell the DAX at 10845. My stop loss would be the average true range, which would be about 200, and my take profit, so this is 10,830, so 829. If I add 200, so if it hits 10,029, I hit the stop loss, which it does over here. The question is, did it hit this? So the moving average is 10,568. So it depends. If it hit the stop, if it hit the 20-day moving average here, I would have made profit. No. I'll have to think again. Oh, so I got lost my train of thought there. I was looking at the ATR as if it was the RSI, and I was going, no, that's not. So here is my buy. It's RSI 80, and I would have bought it at 10,850. I would have put the stop loss at 200 above. So I either would have lost 200, or if it hit that, I would have made 200. So since I don't have many examples, I'll actually zoom in and check. It doesn't look like it. Yeah, I think there's some gap there. That seems to have hit it. Okay, so I needed it to be 10,200. No, I don't think that actually would have hit my stop loss. And I think it would have hit it there. So if I'd done it, I would have sold it at 10,770. I would have made it a small profit, but not a loss. So that's twice that the trade worked out. Here is the other example. I would have hit 80, so I would have sold here. My average true range would be 160, and that would mean once it hit 9,860, I'd have to sell it, which it did rapidly. So I would have lost €160 here. I would think of this as, I would have, my rule would have been I sell it when it crosses the 80-day moving average, because I wouldn't know what's happened in the future. You could say, oh, what about I sell it when it goes above 80 and then it crosses below? So then I would have sold here. So, you know, that's what you have, that's what it comes down to. You have to experiment and see what set of rules you're happy with. Then you have to go back and check. I'm going to do one more here, but you basically want to have checked as many as you can. Ideally you want to have checked 20, 30, but maybe at least 10 to see, okay, in general this is encouraging. This tends to work, or even this might work. So I'll look back here. So these are all under 60, the RSI. So it's here you are. So this is another one. So once I cross 80, I would have sold it, and the daily range is actually only 75 at this stage. So I would have sold it at 9,411. I would have put a stop loss which is 75 above, and I would have gotten out when I hit the 20-day moving average. So how much lower is this? 9,215. So I basically would have made €200, which is not bad at all. And again, I would have only risked 75. So my risk reward is, 1 to 2. So that's just a suggested trade. I actually just came up with this trade as I recorded the video. I didn't know when I began. But what I'm saying is that you can construct rules very easily. Then you just want to test it, and now you can apply it. So if you write down in a book, the rules that you're happy with, which you've checked a few times, then you know what your trading rules are. Then you can tweak them. So for example, there was the thing of, do I apply it the second it crosses it? Do I wait till it crosses below it? Do I only apply it if the risk reward ratio is 1 to 2 or greater? So that way I don't need to be correct that many times. So that's what I wanted to talk about today. I actually wanted to talk about backtesting next week, but we actually ended up covering the gist of it today. I mean, that is pretty much all there is to it. That you come up with a rule and then you check to see how it did. When I do computer testing, you'd have various data sets saved up. So maybe, during the 87 crash, during the 2007-8, the dot-com crash, so you have various different data sets, or maybe during certain boom markets. Then what you do is you test your strategies during those periods and see how they did. Because you don't have any formula or maths that will tell you what the answer is. So the best guide you have is historical, knowing that the future is different.